Welcome to Fund, Build, Scale. I'm Walter Thompson. I worked in tech before becoming a journalist. Now I'm talking to a diverse range of established and emerging founders and investors to learn more about the tactics, strategies, and frameworks they're using to create early-stage startups. We're discussing challenges like finding a co-founder, developing a value proposition, fundraising, going to market, and other essential topics for tech entrepreneurs. In the first 10 episodes, I'm focusing on AI, mainly generative AI startups. I'll be right back after the short break. Thanks for listening. Fund, Build, Scale is brought to you by the following sponsors. Fund, Build, Scale is sponsored by Mayfield, the early-stage venture capital firm that takes a people-first approach to helping founders build iconic companies. The podcast is also sponsored by Security, pioneer of the Data Command Center, a centralized platform that enables the safe use of data and GenAI. I'm here today talking to Navin Chaddha, managing partner of Mayfield Fund. Thanks very much for making the time today. I appreciate it.
Absolutely, Walter. It's a pleasure to be with you.
And thank you also for sponsoring this podcast. It's been a real opportunity for me, and I've learned a lot, and hopefully the audience is going to learn with me.
Thank you. It's a delight to be amplifying the work you want to do.
So my first question, why did you launch the AI Start Seed Fund, and what are your long-term goals? If you're successful, how would the world look different in 10 years or so?
Absolutely. So I think first and foremost, as everybody realizes and is saying, AI is a tectonic shift in the technology industry. It's going to change the way we as humans work, live, and play. And then it'll go beyond humans to go understand and do things for nature, if you will. So why are we bullish on AI? That's the reason. And our primary belief is AI plus humans is going to be human squared. And the purpose of our seed fund is, in our history of investing over the past 50 years, we have primarily been an inception stage investor. 10 years back, inception stage investing used to be Series A, then it became mango seeds, I don't know what it is, but our focus is very simple. How do we partner with entrepreneurs at the inception stage? Sometimes it'll be called a pre-seed, sometimes it'll be called a seed, sometimes a mango seed, sometimes a watermelon, sometimes a Series A. We want to just partner with entrepreneurs and help them build great companies from their inception to iconic. And in order to do that, we have created a dedicated vehicle where we can start with smaller checks, which could vary from 2 to 3 million, 4, 5 million, because in the past, Series A's have been 8, 10, 12, 14. So we want to meet the entrepreneurs where they are. And hopefully with what Mayfield has done, other established venture firms do that too. So the pie becomes bigger. We want to just foster innovation.
Mayfield talks about having a people-first framework. What does that mean in terms of evaluating new opportunities, talking to founders? How does that manifest itself?
Yeah, so I think it's fairly simple. Again, we have a point of view, and it could be different or the same as others. Our point of view is less focus on human-centered AI, which elevates humans rather than displace them. And for building those kinds of companies, first and foremost, we believe mission and values are critical. You need to think of doing good for the world at large besides making money. Yes, it's a capitalistic world. We'll all make money. And in order to do that, you need to have very strong mission and values. You need to be GenAI native. You need to think from day one about trust and safety, and also keep in mind how you can take care of data privacy and security, and then focus on figuring out, can you really elevate humans and make them better? And that's what our view on what a people-first framework for AI means.
So how far along does someone need to be in their journey as an entrepreneur before they can pitch Mayfield AI Start Seed Fund? What do they need to show you as far as validation or social proof?
Yeah, I think it's very simple. As I mentioned earlier, we're looking for entrepreneurs at the inception stage. Ideas can be half-baked. We have helped build companies over the last 50 years where they were at the napkin stage with paper and pencil ideas. And we want to help them, partner with them, and figure out what that journey looks like. So my call to action for the entrepreneurs who are going to be listening to your podcast is jump in, call us, find how to reach us, and we are here to help evaluate what you're doing. And if stars aligned, you like us, we like you, let's go.
In your mind, what does a fundable idea look like? The rough shape of it.
So what I would say is whether it's AI or non-AI, it starts with, is the product you're trying to build a must-have or a nice-to for a certain segment of the market? Because our belief is painkillers sell, vitamins don't. Everybody's busy. You need to rise above the noise. Second, is this a niche opportunity where you just have 100 customers in the world who need this? 1,000, 10,000, 100,000, millions? So let's get on the same page on what it is. And I don't think asking for what your revenue potential is, what's the size of the market, that's too early at the inception stage, right? So is your product painkiller? How many people in the world need it? And what's going to be, if everything works, what's going to be your unfair advantage or moat which allows you to win? It could be IP, it could be people, it could be knowledge, it could be a business process, it could be business model, it could be pricing. Let's figure it out. Every company, a lot of companies will have the same idea, but you need some defensible moat. And then, are you willing to put the company first and surround yourself with excellence? So then let's go. Let's go. So that's what I would say. It's not like you need to do this, you need to be this. It doesn't matter. It's raw. But those are some of the tenets we look for.
That's interesting, because at this point in the hype cycle, I feel like a lot of people wonder how deep a moat they need to have dug before they can talk to an investor. It sounds like you're saying the idea is key, but the founders still need to have dug a somewhat defensible moat before they approach you. Is that fair to say?
Or let's figure it out around the way. I want to just make sure the problem you're solving is a painkiller for somebody, and that somebody is not 10 customers. It's potentially many money. And then if everything goes well, you don't need to have figured it out. What do you think is going to be your moat? So I'm just looking for a bet you want us to make. Clearly, since you're a paper and pencil idea, you're not going to know what it is. Let's engage and figure out.
This leads to my next question. How large is a typical seed round these days?
It's all over the place. There are, even before the seeds, there are like pre-seeds, then there are seeds which could start at 2, 3, 4 million, and there are mango seeds which have gone up 4, 5, 6, 8 million. But I'm seeing rounds, seed rounds 8 to 12 million now. And then if you are a hot team, repeat entrepreneurs, the number is 20, the number is 30, the number is 40 million, 50 million. So I wouldn't say these are seed stage companies in the traditional sense we have been using for the last 5 to 7 years. It's really inception stage companies. What capital they need to be able to get to the next milestone. Some of them will be capital light. They need little money to get to the next phase. Some of them will require a lot of capital. So I would say seed should be looked broadly as it's an inception stage company. What's the right amount of money, right? Let me give you an example. If you're taking a short flight from San Francisco to LA, you need a plane which can hold a certain amount of fuel. You go from here to Denver, fuel increases. You go to Texas, you need more. You go to Chicago, a little bit more. Then you go to New York, even more, right? Because if that's your destination, you need to make sure at least you have capital, which is the equivalent of the fuel. So there's no right answer.
Can you speak a little bit to specifically what kinds of opportunities are you looking for in 2024? And are there specific subfields or industries you're interested in or not interested in?
Absolutely. So I think having been in business myself for 20 years as a VC and another 10 years as a startup entrepreneur before that, I think there are two approaches as an entrepreneur or as a VC you need to have. One approach is, that's the pertinent question you're having, is have a prepared mind. Where is the puck going? Where are the opportunities? But unfortunately, the mega companies, most of the times, you need to just have an open mind because nobody knows and greatness gets created, right? And there are many examples in consumer, in business, you just don't know. So I would say you need to be nimble, have a prepared mind, but keep your vision, not tunnel, and have an open mind. As far as the investing is concerned on the prepared mind side, what I would say is, in particular in enterprise and AI-enabled enterprise, we are looking at opportunities up and down the tech stack. So it starts from semiconductors, moves up to the infrastructure layer, which is as a service now, then goes to the data layer, then middleware and tools, and then applications which are built on top of it. And the bottom 4 layers, Mayfield is calling cognitive plumbing. And the application layer for AI will enable itself as applications, services, co-pilots, autopilots, agents. You just don't even know what the possibility is going to be. So I think huge opportunity like there has been in the tech industry, similar to the PC and client server era, leading to the internet, leading to mobile, leading to cloud. This is just a continuum. The whole stack is being reimagined, and that stack is going to enable net new things which weren't even possible before. So that's the way one has to look at it.
Any thoughts on how it might impact, I guess, what we think of typically as consumer internet or consumer products?
Yeah, absolutely. So I think the first phase is this cognitive plumbing layer needs to get built. And OpenAI is a good example of what it's showing is you use AI at the back end, you build cognition, you build reasoning, you build context. But the way you interact with their product and service is human language. It's natural language. I think we should assume that interface is going to redefine every consumer, every business application, and humans will interact with machines, and machines will interact with humans in human language. So no longer you have to script, then there was a graphical user interface, then it was mobile. This is the new thing. So it is a combination of back-end cognition, but the front end is machines understand human language. So humans will converse with machines as if it's another human, and machine will converse back to us in the language we understand. And then as a result, what will happen is AI is really going to be my teammate. It could be my coach. It could be my genie. It doesn't matter, right? Like, it's going to be a companion with you forever. Either you support it or it supports you. Remains to be seen. So I think it's going to just disrupt the way we interact with computers, with mobile phones. So it's very, very exciting for entrepreneurs. But what it will be, this is where you need to have an open mind. Open mind. And just imagine what could be done, and don't look back in the rear view mirror. That's the wrong thing. If this platform is enabled and is available, what can you do? Don't just think incremental in the consumer space. Think bigger. Imagine the world. Make it what you want it to be.
Exciting.
Yeah, very exciting.
I mean, this is very different from B2B SaaS. So what are some of the success metrics you're looking for a year after that initial inception investment?
So I think you're absolutely right. Getting SaaS companies funded at the inception stage used to be the hardest, because people used to say, hey, how many customers do you have? Have you built a product? What do you have? I don't know this market, or the big companies are going to do it. So people used to bootstrap, most of them, make some traction, show some customers, and then get some money. This time, it's different. And the reason is the cognitive plumbing layer, essentially, you need money. It's capital intensive. Maybe the apps you can do with lower amount of money. So what's different this time is you need to lean in both as an entrepreneur and a VC, be willing to take the risk and roll the dice. But what should one be looking at as the OKRs and metrics once you get this company funded is, hey, is your product a painkiller? Have you talked to 40, 50 potential customers? Have you defined your minimal viable product? Launch the product and start seeing, is it a must-have or a nice-to? Rinse, repeat, till you get some people who love you. And then raise more money after the seed to see if you can establish product market fit. And if you have that, the rest will be history. So learn, crawl, walk, run, and then we'll fly. Seed stage, let's just crawl. To walk, you'll need more money. To run, even more money. Then we'll worry about flying.
We'll be right back after this word from our sponsors. Are you thinking about launching an AI startup? Mayfield's $250 million AI Start Seed Fund is actively searching for idea stage entrepreneurs who are working at the cognitive plumbing layer. That's models, middleware and tools, data, infrastructure, and semiconductors and systems. Mayfield has a long track record. Since its founding, the firm has been an early investor in more than 550 companies, which has led to 120 IPOs and over 225 mergers and acquisitions. If you have a fundable idea for an AI-first startup, email aistart@mayfield.com. Every business that incorporates AI must account for data privacy, compliance, and governance. That's why security developed its Data Command Center. Instead of setting up different tools that can eat up time, money, and add complexity, Security's award-winning technology automates compliance with global privacy regulations, includes a library with more than 1,000 integrations across data systems, and identifies data risk to enable protection and control. To learn more, visit security.ai. And now, back to the conversation with Navin Chaddha. What are some of the biggest challenges in investing in AI startups that you're seeing? What keeps you up at night?
I think what gets me excited first is the massive opportunity. The biggest challenges today as a VC of investing in AI startups is there's just way too much noise, way too much hype. Raises are again getting out of whack. Valuations are getting out of whack. Most of the people just add AI as they used to add .com. Then they're mobile, then they're cloud. There's no AI DNA in most of the companies. They're whitewashing. The value prop is more of a vitamin. It's not of a painkiller. So you have to spend a lot of time to figure out what is real and what is not real. What keeps me up at night is the AI startup market gets overcapitalized and too many Me Too startups get funded. And essentially the customers get confused and don't buy and wait for the winner to emerge. And then the big companies get there. So I would like fewer companies, more focused, build for the long term, built in the right way, if you will.
I do want to talk about what you look for on a founder team, but going back to what we just talked about, how important is it to you as an investor to see a deep bench of AI expertise on the founding team? Are you happy to invest with academics and researchers? Do you want people who have business experience? What does your dream team look like for an AI startup, a founder team?
So what I would say is every team is not going to have everything, but if you're going to play in the AI space, first and foremost, you need to have some technical chops and some domain experience. So either you worked in a company, you worked as a PhD student, as a grad student, you need to have some experience to be able to figure out how to use this technology, how to innovate on it. Second, it'll be great if you have some team members who understand the domain you're going after. The good news is, if you are playing at the cognitive plumbing layer, it's about the tech, it's about the product. But if you are working at the applications layer, Then if you're solving a problem for salespeople, you need to have somebody on the team who understands how salespeople work. If you're selling picks and shovels, it's easier. You see what I'm saying? If you're in the cognitive plumbing layer, it's easier. You don't need to understand the domain-specific stuff of how sales works, how marketing works, how legal works, how finance works, how business development works. So there is no right solution. And most of these companies will be founded by first-time founders. So it's the same story again.
Warm intros are hard to come by unless you're already inside a Silicon Valley network. So can you share any advice for founders who are working outside major tech hubs when it comes to building investor relationships?
So I would say you can try everything. You can do cold emails. You can reach out on LinkedIn. The response might be low because the spam filters, not that we don't want to respond, have gotten good. So what I would recommend is really try to get a warm referral on somebody you see the VC is connected to, and you know to get a referral into them, and maybe they're speaking at a conference, go meet them, because most of the VCs are approachable and they want to help founders. And if nothing works, cold call their office. Kidding. If that doesn't work, just show up at the office. Just be persistent. Don't back off. Just keep going. But the easiest one is warm referrals. Look on LinkedIn. Who does this VC work with? Which boards they're on? Look at through your network who knows those companies. Somehow get to that network. And most of the times you'll realize you're only 2, max 3 degrees separation from these people. Reach out that way. That will be the best warm referrals.
I'm sure no VC wants to be seen as just an ATM machine, cash on demand. So what are some of the ways that early stage founders can actually leverage their inception investors? And where do you expect them to make mistakes and ask for help?
Yeah, absolutely. So I think first of all, as I said, AI, you should view it as being your teammate. I think VC, you should assume that they will be your teammate. They'll be your coach. They'll be your mentor. So essentially, the first step has to be before you call for help, build a zone of trust with your venture capital investor. Get to know them. Spend time with them. Be secure in your skin. Share bad news earlier than good news. And just establish the rules of engagement and use them as a safety net. And then be shameless in asking for help and say, I'm stuck here. I'm thinking about strategy. What do you think? Engage them rather than evaluating them. I'm hiring this person. This is the spec. Do you know people? Are you willing to interview them? Hey, I'm trying to get into this account. Can you make an intro? I need help with PR. I need to get placed in Wall Street Journal. I need to get to know Walter, right? So essentially ask for those things, right? And ask questions. No question is bad, right? Learn along the way, make VC your partner, and go. Don't hold back. The mistake can be think of them not as a team. That doesn't work. It doesn't work.
Actually, I want to skip ahead to a question. So what are some of the top questions AI-first founders should be asking potential investors in 2024?
First and foremost, an entrepreneur should not be asking the VC. They should be figuring out, are these people really going to be backing me or my idea? Or are they backing the market? Are they going to be there in tough times? Will they watch my back and support me through thick and thin? And rather than asking them, figure out where things didn't work for them and how did they act with those founders. And of course, you should ask them for on-sheet references. You should ask how do they add value? Do they have any experience in the AI space? Are they company builders? Have they been entrepreneurs? But just spend time with them. Spend time with them like you spend in recruiting or getting your co-founder, it's very, very important. Read them, understand them, diligence them, back channels, on-sheet references, off-sheet references. Don't go wrong on this decision. It's one of the most important decisions to get your first investor, as important as getting a co-founder. So do the work. Whatever time it takes, do the work.
What does it look like when someone's rushing this process? What happens?
I think they make a lot of mistakes. It's not only just rushing, just going for the highest price sometimes doesn't lead. It's all paper. Doesn't lead to the best outcome. Just relax. Company building is a marathon. It's not a sprint. Take your time. Opportunity will still be there, right? It just takes time. This is a different game. This is a different game. You're dealing with humans. As you said, VCs, they're not machines. They're not ATM. You have to deal with them. They'll show up at your company. They show up at the board meeting. What are you going to do with them? They're going to be on your board. You report to the board. Spend the time. Make sure they're the right people. Because most of the times, companies can lose because there's no market. A lot of times, there's market, but there's infighting. Man, I don't have time, neither should you, to be part of that, right? Take your time. Slow down. This is one of the most important decisions. Take your time.
Going back to the pitch process for a second and the idea of creating a painkiller, not a vitamin. I've heard you say that before, but generative AI is still relatively new technology. So when you look at a pitch deck, how important is that TAM slide? Or could I just leave it out entirely?
Yeah, so I think at least for us, it doesn't matter because whatever time you show us is going to be wrong. Majority of the time will never get there. And for the companies which work, it'll be 10x more than what you had thought. So at the inception stage, that's where our AI Start Fund is focused. I go back to the same thing. Don't worry about revenue. Don't worry about market size. Focus on, is this a top pain point for a certain segment of the market? They have a headache. Man, they need Tylenol or Advil. You're selling them vitamin Z. They don't even know why they need vitamin Z. Second, right, like think abstractly and engage with them. I've talked to 40 customers, 50 customers. I think they have this need. And extrapolate it. Think how many customers in the world need it. But tell me, once you know that, how are you going to get there? Talk about fast iteration, the lean startup, because dinosaurs never survive. Tell me how you're going to reach these customers. What do you think your business model will be? Let's engage in those kinds of things. And if you're going to fail fast. Don't worry about revenues at an inception stage, dollar amount of the TAM, dollar amount of the SAM. It's irrelevant. Focus on basic principles of building a company. It's a paper and pencil inception stage. You don't even have a product, right? It's like you're going to build a tall building. Man, like, let's figure out the architecture. Spend the time. Let's build the blueprint. What will it look like? This is not good. That is not good. Let's do it ahead of time rather than putting the building and you keep adding more floors, then the building tilts. It just doesn't work.
So there's no building the plane in the air when it comes to AI then? Okay.
You can't, right? Like, just take your time. Once you're aligned, go. No looking back. Go. Because then you know you're prepared. You're going to war. When you're building a startup, come up with a game plan and a backup plan and go. Don't say, I'm going to just land up in the field and then I'll figure it out. It doesn't work that way. The best teams in any sport win. They practice. They watch the videos of the other people. They know their weaknesses. Think before you act. Plan before you build.
But there's still that Silicon Valley trope of building in public. Showing people what you're working on and kind of doing it all very transparently. Does that still obtain for AI for startups?
Yeah, it does. But I think make sure you have something before you go talk about it. Because otherwise you're going to lose all credibility if it doesn't work. Take your time. Do it the right way.
When it comes to first-time founders, how involved do you get when it comes to helping them define their value proposition and carve out that path to compete?
So I don't think it's about first-time founders or second-time or third-time founders. Our business is like that of a coach or a doctor. It depends upon what the need of the entrepreneur is and where do they need help. So we don't want to go do backseat driving. They need to just tell us, hey, I want to go from Menlo Park, where you and I are, to San Francisco, and engage in a brainstorm. What do you think is the best route based on your experience? That should be the discussion. If they don't ask me that question, they have Google Maps, I know they can get there, right? So I think there's no right answer. You sit down with the entrepreneur at the beginning, first, second, third time, at every stage of the company, and see, hey, do you need help? Or you don't need help? If they don't need help, stay out of their way. Let them execute. More power to them. I want more entrepreneurs like that. But if they ask for help, either jump in yourself or have your broader team help, or you have a broad network, intro them to the right people. They are the drivers. Never as a VC get into the driving seat. No backseat driving. Doesn't work. Doesn't work.
I mean, I think a lot of investors encourage founders to cultivate that mindset that they're in this for the long haul, they're building something, it's going to take years. But it seems like a growing number of AI startups are finding the cost of developing their model so prohibitive that they've started looking for a buyer, trying to find an exit. Without access to compute and data, is there any way to get a bootstrapped AI idea off the ground? And do you think any AI startups will be born in garages?
Yeah, I think they're already being born in garages. And I would say don't solve problems which are already solved. Solve new problems, raise the right amount of money to get to the next milestone. Maybe it's 4 million, maybe it's 10 million, maybe it's 20 million, maybe it's 30 million. Find the right set of investors who can give you that money. But please, 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 please don't build a cloud. Don't build an NVIDIA chip. Don't go compete with OpenAI. Endorse them, use their stuff, and innovate around the edges or above them on the problems they're not solving and the world needs help on, or solve adjacent problems at the layer they're playing. NVIDIA chip, we have a very good company. When AI gets to the edge, they provide cooling. Cooling in devices where fans can't go. It's great for the whole world. Solve an orthogonal problem. You go to the infrastructure layer, clouds are being used. There is need for trust, model evaluation, safety, security. Go solve that problem. You don't know whose model will get used. You don't know whose cloud will get used. So solve problems. And all the cloud providers will be happy. NVIDIA will be happy. They can sell more chips, more cloud adoption, more model adoption. Everybody wins. Align yourself with the roads, the waves that are being created. Become a parasite on the marketing they're doing. Ride their coattails. Once in a while, you can attack them, but make sure you have enough money and a defensible moat and not a Me Too proposition, because in AI, besides domain expertise, capital is very, very important. It's very, very important because of the questions you talked about. Model development, model training, compute. It just doesn't stop. So be mindful, right? Don't reinvent the stack. Endorse things which have been done. Leverage them, be adjacent to them, maybe disrupt them once in a while, but figure out how you play in the ecosystem. Don't become an island. No need to become an island.
Returning to that comparison between AI first and B2B SaaS startups, most software as a service companies will start with small and medium-sized businesses, work their way up to the enterprise customers. That doesn't seem like that's the path for AI. You really got to go straight to the enterprise. But that path, it's fraught with difficulty. So what challenges are you seeing with regard to AI adoption at the enterprise level? And how would you advise a smaller startup that's trying to get buy-in with CXOs?
So I would say the market is still early. You're absolutely right on. Working with the impedance mismatch between a startup and a Fortune 500 company, God, man, I don't know, it's 10,000x, 100,000x, millionx. So choose your customer wisely. My advice would be the size of the customer doesn't matter. It's more important, like we used to say, a tech-forward customer, a cloud-forward customer, a mobile forward customer. Now you need an AI forward customer. Size doesn't matter. Are they ready? Is the pain high enough? Will they jump in? And make sure if they're jumping in, you're not becoming their development shop. You're not building a custom product. Build a product that's applicable to a broader set of the market. So that's the way I would look at it. Are they putting you in the lab and will never see this stuff? Or they're ready to write the check and ready to deploy. And if you can't match the impedance between them and yourselves, get a big company like Accenture to work with you. Get somebody else. But make sure, right, this is a broad set of problem. You're not their development shop. And choose the right company, Again, don't jump into the first customer. They'll bankrupt you. So I'm not sure your first customer should be a big company. Find an AI forward company. It could be a fast growth SaaS company which needs to leverage AI, or a lot of companies are looking at building on AI. Security is a huge issue. They don't know what model trust they can do. Figure out who they are. Get traction, get proof points, and go with customers who are ready.
You kind of touched on them briefly, but kind of go a little deeper. What are some of the downsides of working with a big company, and how can founders mitigate them? I've heard from CXOs that they don't have a lot of time to work with startups. They only have time to work with maybe 2 or 3 at a time because they require so much resources and overhead. And then also the issue of the liability of, it's a make or break for the smaller startup, but let's talk about the break aspect.
Yeah, absolutely. I have seen the way a big company works versus a startup. Startup has 5 employees, 10 employees, 0 salespeople. Founder is the one selling. And the enterprise brings 20 people, 30 people, 40 people to their office. The office can't accommodate them. The office was only for 5, 10 people. So be careful, right? They might be wasting your time. So the way I would go about it is figure out the team you're working with is nimble. They're not at the customer. They're not layers of decision makers. They drown you. 1 meeting, 2nd meeting, 3rd meeting, 3 months pass, 6 months pass, 9 months pass. You'll be dead. You need early adopters, right? When you go through a tornado market, right? You're not looking for majority or late majority. Find customers. If your product was built, can use it and use it very quickly, and going to die if they don't use your product. If you have a product, go find customers. When they hear about you, they're going to get to the top of their building and jump up and down from the roof, shouting, man, my day got made. I heard about this company. This is the problem I was trying to solve for 10 years, and I finally found it. And that's what you have to figure out. Not you come in, I'll do this for you, and like maybe you can, maybe you can't. Doesn't work. Alignment of interest.
Mayfield has a lot of in-house expertise when it comes to AI, but most investors, they're generalists. So do you have any thoughts about how that could affect the companies they're investing in and the sector at large as these companies mature?
So I think this is where first and foremost, I put the problem on the entrepreneur listeners. Make sure you're partnering with somebody who's in for the long haul, believes in AI, is not going to run away, and has some expertise. And I think there are enough of us, and Mayfield is one of them. So where are the entrepreneurs going to go wrong if they don't choose wisely who their investor is? They're going to make mistakes. And nobody would have seen the movie before or have pattern recognition to keep them within the guardrails, right? Second, a lot of money will be lost. The AI sector will get overfunded. As I mentioned earlier, lots of Me Too companies. And then what will it lead to? Customers will get confused, pause. Established companies will catch up. And this is what is called the trough of disillusionment in the hype cycle. So let's not do that, please. Solve real problems. Fewer companies, must-haves, do it the right way. Otherwise, some will make it on the other end, but 90% will fail. I don't want that. The industry doesn't want that. Let's play wisely. Let's have muscle memory. We made money in internet, lost a lot of money. We made money as an industry in mobile, lost a lot of money. That's the nature of venture. It's okay. Let's make new mistakes. Let's have muscle memory. Because if we are not careful, the next tulips have arrived. This time they're the AI flavor. We saw it, PC era. Then the tulips became .com. Then they became social. Then they became mobile. Then cloud. Let's be careful. Huge opportunity. Make new mistakes, not the same mistakes. Let's not create a bubble. When they burst, it hurts. You know what I'm talking about, right? There was a COVID bubble recently.
Sure.
Relax, settle. If it's such an important wave, let's do it the right way. The right way, this time.
You touched on this a little bit earlier in the talk, but going a little deeper this time, how does Mayfield view the role of AI with regard to driving societal change, and how does that inform your investment decisions?
So I think this is where, right, like you need balance as an investor. Mayfield pioneered the concept of conscious venture capital, where we believe beyond doing financially well for the society, our limited partners who are endowments, foundations, pension funds, people in need who serve needs of other institutions who serve needs of people. Our job is not to just do financially well, but do good for the world. And that's what we call conscious capital. So we look at our role as investing responsibly in the AI space. We're looking for companies which eventually, yes, there'll be loss of jobs, those things in the short run. But in the long runs, when humans adopt AI, do they perform at human squared? The GDP improves, the income per person improves. Think about the end goal. And are they building the company in the right way? Thinking about trust, thinking about safety, thinking about privacy and security. If they don't, they'll be shut down. Forget about compute costs and data costs. Nobody's going to use them. Like anyways, people wanted self-driving cars to fail, right? They're just looking. Lobbyists will come, unions will come, this will come. So just keep that in mind. Keep the big picture in mind. Huge potential, but let's put guardrails. Let's make sure it's done the right way.
My last question, when I started this podcast, I realized I had to educate myself about generative AI, just so I could ask the right questions. And it's been a real journey for myself. But can you share some of the resources you've used to learn more about AI? What are you reading or listening to?
So I think my belief is very simple. Entrepreneurs need to surround them with experts and excellence. That's what I do. Hire people in your team who are AI native. Go talk to entrepreneurs. Go talk to university professors, PhD students, postdocs. That's how I learn. Go talk to established companies. Jensen at NVIDIA, Satya at Azure or Microsoft, right? Go talk to TK at Google. Talk to the model providers. Understand what they're doing. Read technical papers. We have 3,000 customers in our network at Mayfield. Understand their needs. Do surveys. You have to be hungry. But that's the way I learn, which is essentially talk to people, understand their needs, then go verify, is this technology safe or not? And then sit back and connect the dots and say, I was an entrepreneur in both the PC and the internet era. Then I was an investor when social, mobile, cloud happened. Now it's AI. Can I connect the dots based on real data I've accomplished and go about it, right? So I'm trying to learn the basic building blocks that are happening at universities, what engineers are thinking, what's happening in labs, what are the big providers doing, the customer pain points, and then figuring out how Mayfield should attack that market and what kind of entrepreneurs we should be partnering with. So that's my approach, and then we want to work with people like you who make not only us, but rest of the world aware on what the possibilities are. I think the thirst for learning at Mayfield and also me has grown 10x. Man, this is amazing opportunity. Even for a person like me who has been in the business for 20 years, I couldn't have wished for better because you need to start from the scratch and realize same rules, new technology, use the past, learn from it, have no shackles, apply some of those principles, but learn, adapt, and keep going.
Fantastic. I really appreciate the conversation today. Thanks for your time.
Absolutely. It's an honor to be here with you and to be partnering with you. Onwards and upwards. Let's make the pie bigger.
Thanks, Navin.
It's a pleasure.
I'll be right back with some show notes after a word from my sponsors. Fund, Build, Scale is sponsored by Mayfield. If you have a fundable idea for an AI-first startup who are working at the cognitive plumbing layer, email aistart@mayfield.com. The podcast is also sponsored by Security, Pioneer the Data Command Center, a centralized platform that enables the safe use of data and GenAI. To learn more, visit security.ai. I'd like to thank my guest, Navin Chaddha, Managing Partner of Mayfield. Coming up in episode 2, I spoke with Rodrigo Liang, CEO and co-founder of Sambanova, about digging a moat, customer discovery, and product-led growth. He also shared some advice for anybody who's thinking about joining an AI startup and had some thoughts about fundraising in 2024. Please subscribe to Fund, Build, Scale in your favorite podcast platform. And if you like this episode, I hope you'll give me a great rating. For now, you can find the Fund, Build, Scale newsletter on Substack. The theme for the podcast was written and performed by Michael Tritter and Carlos Chairez. Michael also edited the podcast, provided additional music, and I'm deeply grateful. Thanks again for listening.